Tesla is crashing and the sellers are using Elon selling and Twitter as scapegoats. Hello fellow investors, this is me 9 months ago.
Tesla is worth $50, not 1,000.
I told you guys this was a very dangerous stock to both short or own at the time. It's a buyer's market, a trader's market, whatever you call it, and not necessarily a value play.
Look at this revenue growth. Double digits crazy. These are stocks you want to pay premium for. But is it 20 times like here?
It wasn't safe to own for long-term accounts at previous prices. I told you this is a risky stock and you could easily lose money here while you're sleeping. I also said that if you're ever putting money on this stock, you should know that it is for a trade and not necessarily a long-term play.
Second, if you're thinking of buying the stock at these levels, you have to understand that this is a very risky play. You might lose a lot of money. And this might not be a long-term play. This is a trader's play. At the current valuation, this is way too inflated that early buyers could just dump shares on you after hours while you're sleeping. This could very well be a bubble. We've seen this stock price movements before. It happens, and it might happen to Tesla. It happened to Ford.
I then started the video with this.
Guys, we all know Tesla is overvalued, so I'm just gonna skip to my second metric.
But by the reaction I'm seeing around the community, it feels like a shock to them, and I wonder why. Did they honestly think that Tesla is always going to the moon and never going to retrace back? What a shame. To be fair, in the video I did say I was going to buy, but it was only for trade. I said I was going to join this movement if it ever was.
Because this is clearly overvalued. But I'm buying. I want to buy the stock. Maybe fractional, time by time. Even when they split, I'd only be buying fractional. I won't be loading a lot of money in one buy. You know what I mean? Some people would short this. I wouldn't. I wouldn't bet against Elon. I'd rather stay away and ignore this, but I'm taking the risk of putting money on this. Just not at the current prices, of course.
But honestly, I never really did. I never bought the fractional shares. I never even traded the stock, never shorted, never bought. I was tempted at one point, and the stock was tempting, to be fair. I just continued not touching the stock. The video has 46 views, 47. And I'm pretty sure 20 of that is from me watching over and over. So I didn't really feel the need to follow up on what I'm gonna do with this stock. So I just never screened the stock again, like Amazon. I never really understood how Amazon was trading, so I never bothered and touched these two stocks. Anyway, this is not about me. Let's talk about Tesla stock. To be honest, I was looking for a crash, like a huge gap down after hours, panic selling, but the stock is actually not doing as bad as I thought. Well, it's a slow, painful death, for sure, but I was looking for a capitulation, like a meta stock capitulation, gapping down aggressively after hours. I mean, it could still happen, but I could only wish it happened sooner than what we're having right now, just slowly killing the retail. I thought a capitulation is only proper because the buyers had it easy. They just buy, and buy, and now we're not seeing as much selling as one would expect from a very bloated stock. Instead, it's selling off at market hours. That means it's heavily shorted, or maybe the institutional buyers of the stock are just slowly reducing their positions, feeling the sentiment, analyzing the psyche of the market participants. That, or maybe the retail is buying the dip, and they're buying hard. This run-up of Tesla is not fundamentally driven. In fact, the opposite. A lot of shares were diluted here. It just so happens that a lot of people were interested in the stock, so the stock price went nuts. This is not caused by share buyback. This is just pure speculation. People believing and buying the growth story for the stock. And yes, they're still growing at a very high rate. But why are people selling? Well, profit taking. That's all there is. The stock is still expensive. They're securing gains. Sure, Elon sold some shares left and right, but at least he knows when to sell the stock expensive. Now that it's crashing back down, where do we see the buyers coming in? Do we see Tesla back at value, fair price, or would it still trade at a somewhat reasonable growth multiple? This is Tesla's valuation summary. Yes, it is still expensive at the current price of $123.15, trading at 3.71 times their margins. But historically, it is cheaper now, only because it was trading at very high multiples then. Take note, I'm using the highest band of their margins here, of 10. Normally, I should be using the lowest band of their margins. I'm giving Tesla the benefit of the doubt that they could have margins of 10 going forward, maybe consistently. But it's important to note that at 10 multiple, it's still expensive and we don't have safety of margin if we're to buy here. Tesla remains a buy for me even though overvalued trading at premium. Maybe a hold? Last time I rated it as a buy as well. Because like I said, it's hard to value this company. I don't necessarily think they're just an auto manufacturer. I could see them expand to do other things like Amazon. And yeah, maybe at 10 multiple, that's me paying a little premium for the stock. My fair value for the quarter is $33. Go to Focus's intrinsic value is at 15. This fair value changes quarter over quarter. It depends on the EPS they report. But the multiple I'm using is 10. This is Tesla's charts, the fundamentals, and how much people paid for the stock in terms of PE, price to free cash flow, and PB. You can see here they paid as high as 400 PE for the stock. Now it's just trading at 37. They paid 300 price to free cash flow, now down to 43. They paid 46 in PB, and now it's down to 10. All that while the fundamentals haven't even changed. Actually, it's only getting better. Look at the revenues trailing 12 months, the free cash flow trailing 12 months, and the equity. These metrics are increasing quarter over quarter. But the stock is just massively overvalued and it needed correction, some profit taking. The black lines you see here is my fair value for the stock. Currently, it's at $32. From 28 last quarter, 25 before that, 16, 10. The growth is exceptional fundamentally. This is multiple of 10 multiplied by the EPS trailing 12 months. Analysts forecast still increasing profitability and sales, just not at the rate expected like before, obviously. The blue lines are my fair value given that these criteria are met. If we're going to see Tesla back at value, expect it to go down more. If it decides to trade at a reasonable growth multiple, just use the fair value here then multiply by a number. A multiplier you're comfortable using and paying for Tesla. For example, from my current fair value of 32, use a multiple of 2. 2 if you think they'll grow double their EPS in the coming years. You get 64. That's the price you're paying for Tesla's growth story. But again, I don't pay for growth. I don't pay premium and I don't recommend buying at fair values. I don't recommend paying premium for stocks. I want my stocks to overshoot below my fair values. That's when things get interesting. I only react to their financials. These numbers could go higher, my fair values could go higher, also lower, depends on what they report. Again, this fair value is not accounting for both growth and share dilution. And again, and I can't stress this enough, at multiple of 10, the stock is still rich and we're paying without safety of margin here. So yeah, this is the price level I'm watching for Tesla. I'd be interested anything below $30 at least for this quarter. But as you can see, the forecasts, it's still to the upside. I don't think I'll get my $30 anytime soon. So I'd rather wait for their fundamentals to catch up with the stock price. And until that happens, I still won't be touching Tesla. No matter how great it is and how much gains I'm going to miss out. That's my take on Tesla stock. If you like the data you see right now, consider subscribing to the channel, learn about our process. Also, this is probably the last time I'm screening Tesla on this channel. I've included it in the list of the stocks exclusive to Patreon subscribers. Go check our Patreon for more exclusive content. See you next video.